Hello all, today we are going to discuss profit and loss appropriation account, right? What is the format and what are the contents of the profit and loss appropriation account which are important for us to get the marks. So profit and loss appropriation account, profit and loss appropriation for the year ended, right? Then same we have to part it in this is your debit side and this is your credit side. Now, profit and loss appropriation, and you have to follow this format, right? So first thing, what happens, this is an extension of your profit and loss account. So you will be getting profit. Most of the time, profit and loss appropriation is prepared when you have profit to appropriate, right? Utilization of profit. This account is prepared for the appropriation of profit, that is utilization. So the entry will come from your profit and loss account. So if you have the profit, then net profit will come over here, net profit, right? So you will write in here, this will come from profit and loss account, right? If you have net loss, that will appear over here, net loss. Loss is your debit balance, so that will come over here, right? Now, if this account is prepared according to the partnership deeds, so utilization of profit will be done accordingly, right? If you have interest on capital, you have to give, so interest on capital accounts. Let's say we have two partner X and Y here, so X and Y's, whatever the amount is there, you have to calculate and put over there. So what we are going to do, that we are going to do one by one, whatever the item is coming over here, how to calculate that, and we will put over it there, right? So interest on capital. Similarly, if interest on drawing is there, right? So if we are in the partnership deed, if there is a clause that if any partner takes any kind of drawings, then the interest will be charged, so that will be income to the firm, that will appear over here. So interest on drawings account, let's say X and Y, whatever the amount is, that will be here. Calculation we will see in another video. So this is it. Then if the partnership deed provides that the salary or commission will be paid, so salary oblique commission account, so whomsoever XY, whomsoever is getting that, you have to calculate that accordingly and you have to put out here, right? So income, we don't have anything now. If nowadays we have a tendency of getting the profit transfer to certain reserves, right? I'm not writing here general reserve, it can be any reserve, so I'm writing reserve. So if we are transfer to reserve, if we are transferring any amount of profit to the reserve account, it can be general reserve or any specific reserve, that would be coming out here, okay? Reserve account, and the amount will be debited over here, okay? But how to calculate that? Because we have two types of calculation for the reserve. One, straight away it says 10% of net profit or 12% or a certain percentage of the net profit will be transferred, so you can transfer from this amount and you can transfer a certain time, that is saying certain percentage of distributable profit. So what is distributable profit? Distributable profit means all the profit and minus all the appropriation and whatever the amount there, that is distributable, and then you have to calculate on that amount. So we will see later on how to calculate that amount, so that will appear over here. So then we will close this, right? If the excess of credit over debit. That means this side is more and this side is less. This side is less. So profit transfer to capital account or current account. At the case maybe I'm writing here capital account, X and Y in their profit sharing ratio in PSR. In PSR I am writing. So they will be given and the total will be there. Similarly, vice versa, if the debit side is more compared to the credit side, right, then you will be having a net loss. So in that condition, loss transferred to capital or current account, I am writing here capital account, as the case may be, X and Y in PSR. So in PSR you will be transferring and that will go to their respective capital or current account as we have prepared. Now certain things you have to put into mind. The first thing is, it is a nominal account. This is a nominal account. Profit and loss is a nominal account, right? Second thing, it is an extension of profit and loss account itself, right? So that means profit and loss appropriation account is prepared after profit and loss account. Third is, it is prepared for a year. This is prepared, usually it is prepared for 1 year. Fourth, it is prepared as per partnership deed. Now you will be wondering why partnership deed? Because the partnership deed will let us know whether the interest on capital has to be given, whether the salary has to be given, whether the interest on drawing has to be charged or not. So it is always prepared as per the partnership deed. Fifth, it is prepared in partnership. This is prepared in partnership. And the sixth one is, this shows appropriation of profit. If you have profit and you are utilizing that in different condition, then it shows the appropriation of profit. So these are the things you have to keep in mind. The other thing you have to keep in mind is, what is the difference between the profit and loss and the profit and loss appropriation account. So difference between profit and loss, I'm writing profit and loss first, and profit and loss appropriation account. So what is the difference, right? So what is the difference? First thing, profit and loss prepared first, and after that profit and loss appropriation account is prepared, right? First you have to prepare the profit and loss account, after profit and loss appropriation account. All items which are coming in all items which are coming in profit and loss account, they are charged to profit, right? And these are not charged, these are appropriation. Whatever items are coming in profit and loss appropriation account, that is appropriation of the profit, right? Matching concept. Yes, this is followed in profit and loss account, but why so? Because expenses are charges and they are matched with all the revenues, whereas in profit and loss account this is not followed, right? This is not followed. Why so? Because there is no matching of that, there is only appropriation of profit. Okay? Profit and loss account is prepared as per law, whatever the law is there, okay, there accordingly we have to prepare. But profit and loss appropriation account is prepared as per deed. Whatever the deed is there, you have to prepare. You have interest on capital, you will place the amount here. If you are interest on drawing, you have to charge, you will place the item over here. So profit and loss prepared according to the law, but profit and loss appropriation account is prepared according to the deed of the partnership, right? So these are the things you have to keep in mind. Profit and loss account is prepared first after preparing the trading account, and after preparing the profit and loss account, you prepare profit and loss appropriation account. All the items which are charged, that is coming in profit and loss account, and in profit and loss appropriation only the appropriation of profit. Matching concept is followed in profit and loss account, but this is not followed because this is not possible, because we are only appropriating the profit according to the deed. Profit and loss account is prepared as per law, profit and loss appropriation account is prepared as per the deed, right? So we always prepare profit and loss appropriation after the profit and loss account. Now three things you have to keep in mind. ठीक है, ये जो net profit है, net profit is the profit which are coming from profit and loss account. Sometimes what happens in the question, you are given that interest on loan, rent and salary etc. to the manager. So three things you always keep in mind, right? They are charged. They are charged. The one thing is rent. Second thing is interest on loan to partner, if you have to give interest on loan to partner, and third is manager's commission, if you have to pay the manager's commission. These three will appear in profit and loss account. So you have to see that, you have to read the question carefully. The net profit which has been given, whether the three item has been debited, that has been deducted from the net profit or not. That means that net profit is coming after all three items. If that is not the case, first you have to deduct here inside the column, and then you have to write the net amount. Or what you can do is, you can prepare the profit and loss account, right? You can do the profit and loss account like this, and you can put the net profit and these three items over here: rent, then interest, then commission of manager, you can put out here, and whatever the net profit comes in, you can transfer it here. ठीक है? Or you can deduct from this if that is not deducted already. So you have to keep these three things: rent, interest on loan of the partners, and manager's commission, right? Rent you will be given straight away. Interest on loan you have to calculate according to the information given, and manager's commission you will be given the information in the question how to calculate that. You have to calculate that, and just you have to keep in mind whether that has been deducted or taken in the net profit and loss account or not, and we are getting the exact net profit over here, or that is not deducted, so you have to deduct it, or you have to prepare the profit and loss account. So this is it. This is your profit and loss appropriation format, and the things you have to keep in mind. And interest on capital, separately we will see how to calculate that. Salary and commission we will see that, right? And interest on drawing we will see that separately, how to calculate that. Then item wise, then we will be able to put the item straight away to the profit and loss appropriation account, and we will get the mark straight away. So this is the easiest question we can get in the whole syllabus. So till the next video, thank you very much. Have a nice day.